Hey traders, Raghee here, and in this video we're going to talk about a concept that is very much a part of the trade and risk management process that I have followed for my career, and that's a nice simple notion. Pay yourself while you can, not when you have to. And so there is a point at which a market has reached a target that we feel that is a level from which we can scale out. But why do we want to scale out? Because the idea here is that perhaps there's some resistance waiting here, hence the pay yourself while you can. Now, why would I pinpoint that level? It could be a value area high. It's also the clearing range high. And I'm not going to demand that a V-score low entry, like we took today in the NAS, would necessarily immediately give us pushes through the clearing range high and continue higher. We're not going to assume a grind higher. What we're going to assume is that there's a pretty good chance the market will remain in the range that it established. So we would scale out proactively while we can at this level. Now, you can see what happened after we hit the clearing range high. I mean, look at the way the market headed lower. But it's still within the zone. So a lot of traders would think, well, maybe we still have a shot of moving higher. And the market did, in fact, hit this level again, this clearing range high level again. Now, if a trader did not scale out of the position, which is what I recommend, at either one of these two levels, take a look at what happened next. Here is your support for the clearing range low, which is where the entry was. And what happened? We continued to move lower. So not only did this trade at that point, if you hadn't paid yourself, go negative, so now you're losing money as opposed to taking profits off the table, 50%, and then moving a stop to break even. That's how we protect ourselves, and that's what pay yourself while you can, not when you have to. And here's another thing too. Think about the time that I like to focus on day trades. We talk a lot about this in these videos, between 9:30 and 11:30. So I want to put my trades on, preferably get a target, and no longer scan for day trades after 11:30. And I still believe that these 2 hours, the first 120 minutes of the morning, are the best times to trade, all right, in terms of day trading. So I'll limit my trades to that window in terms of 1 minute short-term opportunities. Hope that helps. Keep in mind, pay yourself while you can, not when you have to, because then you get stuck in all this turmoil. I'll see you in the next update.